Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our guests on the show. Joining us today are Nirali Shah of Samco Securities, Sameer Kalra of Target Investing, and Avinash Gorakshakar of Profitmart Securities. Many thanks to all of my guests for joining me today. On the show today, we discuss Polycab. The stock has seen a stellar run since its listing. The stock is up almost 60% in the last 3 months. We discuss whether there is more upside for the stock or no. We analyze the third quarter results of Avenue Supermarts. They came out with numbers on Saturday. Tata Elxsi reported a strong set of operational performance in the third quarter. We discuss what's worked for the company this time around and what's the view ahead. And lastly, we discuss United Spirits. While most of the consumption names have rallied, this stock has been an underperformer in the last 12 months. We ask our analysts whether they remain constructive or what is the reason for the underperformance of United Spirits. So that's something that we will discuss in Hot Money today. But let's start with the first stock, and that is Polycab. Stellar listing, and the rally continues, trading at record highs, almost approaching the 1100 mark. Valuation at 22 times compared to a 40 times which Havells does, but one of the largest companies that makes wires in India. What's the view ahead for Polycab? Is there more potential upside that our analysts see? Do our guests like this stock, or it's an avoid? Avinash, you like Polycab? If someone wants to invest for the long term, is it a good plan? Sameer said an SIP. Would you have a similar view?
Yeah, I think, Darshan, I think SIP would be the right mode. The stock has moved up significantly since October. And I think, numbers apart, I think the bigger advantage for Polycab is that it has a very huge distribution network. I think 2,800 distributors, touch point of almost 1 lakh retail touch points. I think this is the, opportunity which, most of the investors, especially the institutional guys, are watching, because this becomes a very strong moat for them to actually, increase their share on the FMCG side. Our sense is that the ROE as well as the operating margins could definitely get a better spike as and how the working capital cycle improves. The company has mentioned that working capital is an area where they would like to focus more, and typically I think despite being the fact that B2B is more volatile in terms of margins, I would believe that any correction should be used as an opportunity to accumulate it slowly over the next, say, 12 months. FY21 could be a lot better, considering the fact that the margins as well as the top line growth could show strong double-digit growth.
Okay, and you see, because right now there is immense competition. Havells is very big in wires. This one is there. There's a lot of Chinese imports that come in. Do you think the market is big enough for everyone to gain market share?
I think it would be. In fact, Polycab also enjoys a decent market kind of share and a good brand reach. Our sense is that despite the fact that there is competition, there's a place for Polycab in this competitive market, and I would not be surprised that finally, at the end of the day, the distribution reach is something which is, going to be very useful for these guys. Typically, when they launch a new product or possibly push an existing product. So I think marketing costs in that terms would definitely not be very high, and I think the reach as far as incremental top line could definitely be seen over the next, say, 12 to 18 months.
Okay, that's the view that's coming in on Polycab. Okay, so I think it's a consensus view that's coming in on Polycab. SIP mode somewhat is something that is being spoken about. Incremental value definitely being seen on the stock. The next stock we want to talk about is Avenue Supermarts, if not one of the most expensive stocks. The last time I checked, it was trading at valuations of 100 times. So that probably makes it the most expensive stock that we have on the listed. But nevertheless, it continues to do well. Despite such valuation, it's up 40% in the last 12 months. Came out with numbers which met estimates, but the rate of store opening has actually moved up significantly. Can this growth continue for Avenue Supermarts, or are valuations a concern? It's an important question, Avinash. I think people love Avenue Supermarts. DMart is one of the most loved companies. People want to invest because it's such a fine run company. But at the end of the day, the valuations are skyrocketing. How should one play Avenue Supermarts? What's your ideal advice for someone there?
No, I think, Darshan, the stock definitely trades at expensive valuations. Our sense is that it trades at almost 60 times FY21 and almost 50 times FY22 earnings. So expensive valuations are there. But if you look at their business, I think despite being a capex heavy model, the asset turnover typically, or maybe the return on capital employed is extremely solid. A 22-23% kind of ROC is very strong for a business of retail. And I would not be surprised that this stock, whenever it corrects, there would be a buyer here, and clearly looking at the liquidity in the stock is not very liquid. There are large funds who actually still want to own the stock. So looking at the numbers, I would believe that any dip, Darshan, should be used as an opportunity to buy. The retail opportunity is extremely high, and this quarter was very solid. 24% growth in top line, a 31% growth in EBITDA, and a 53% growth in profit. So these numbers should definitely excite the market. The only concern is, yes, valuations are not cheap, and whoever gets in will now have to look at the fact that there is very little room for negative surprises in case the slowdown happens, and clearly if the volume growth does not take off, then the correction could also be steep. But nevertheless, at least for the next 12 to 18 months, we are positive on the stock. Any correction should be used to buy.
Okay, correction should be used as an opportunity to buy. Coming in on Avenue Supermarts, I believe that such is the love for the stock that Goldman Sachs came out with a report in which, to justify the valuation, they said it's cheap on, I think, 2025 or 2030 valuation. So I think that's the love that this stock commands. The next stock we want to talk about is Tata Elxsi. Came out with numbers yesterday. Operationally inline set of numbers, even though the revenue and profit numbers were much higher. Again, it's up. It was up 5% yesterday. It's up another 3% today. Okay, so it's a positive view that's coming in. Avinash, what's your sense on Elxsi? What did you make of the numbers, and what's your outlook? What have you told your clients post the numbers?
So I think numbers have been pretty solid. I think if you look at the 9% sequential growth, the EBITDA margin improvement almost 22%, and overall the bottom line growth, I think numbers have been very strong, much ahead of what the street expected. And I think looking at the traction seen from from especially from the transport as well as from the EV segment, our sense is that this company could possibly record decent kind of growth. Hopefully not 9%, but even if they show a sequential growth of 6 to 7%, that would definitely be a good indicator. And I think definitely one should hold on to the stock. I would believe that valuations are not very expensive, but at the same time I would enter probably on a slight correction and typically take a longer term view. Over the next, say, 12 to 18 months, I would believe the traction and numbers could get better. So probably FY21 and 22 could be much better years compared to FY20.
Would you play for the improving auto sales that is happening globally? Is that something that you sense that probably will aid the stock?
I think, Darshan, that is really a difficult call, but I would believe that their large part of the business comes from the auto and electric vehicles. EV is one area where they have been researching a lot. So possibly any big positive surprise coming in there could possibly be a big positive driver for the stock. I think in terms of the capital allocation, this company is very well maintained. In fact, virtually no debt on the balance sheet and a very strong EBITDA margin, and ROEs are in excess of almost 30-35%. So I think any decline should definitely be used to accumulate it as a kind of a portfolio stock.
And the last stock we want to talk about is United Spirits. That's one stock that hasn't actually managed to move while the entire consumption theme seems to be doing well. It's been a massive underperformer. The other part is it's steadily and slowly losing market share. It hasn't done anything actually in the last 12 months. It's absolutely flat. It's losing market share. Pernod Ricard has been doing well. They decided to focus more on the premium segment, leaving the core competence on the lower end, and that is where Pernod Ricard actually gained a lot of market share. So you share a similar view, Avinash, or you like the stock?
No, I think I would prefer to hold on and not make any fresh investment, considering that the second quarter ENA prices also went up. The management has reiterated that third quarter could possibly see some easing on the raw material pricing front, and liquidity would obviously improve. So I think volume growth, which Samir pointed out, is a valid concern. I would believe that maybe for another 1 or 2 quarters, typically this volume growth could be a kind of a concern for the company going forward. But within the premium segment, I think considering the fact that Diageo now looks upon India as a very key market, our sense is that this is definitely a stock to watch out for, and any weakness should be used as an opportunity to buy. Longer term, I think definitely one could definitely make a decent risk reward, but as far as FY20 is concerned, it could be a little disappointing. So I think one would like to wait to see how the Q3 numbers and Q4 numbers pan out and then take a call. Okay,
so wait and watch again is the second response that's coming in on United Spirits. Okay, that's the view that's coming in on United Spirits. Nirali says that it's an investment hold United Spirits, but wait and watch approach by Samir as well as Avinash. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests who've come in, Avinash, Nirali and Samir. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.